All right, we'll go ahead and get started. So first of all, welcome to the crypto compliance webinar with Nominis and CryptoSwift, how blockchain analytics and travel rule platforms support AML compliance. My name is Julia, and I'm the social lead here for Nominis. I want to welcome you all and thank you all for joining us today, and we hope that you find today insightful and inspiring. So today we're going to hear from Snir Levy, who is the CEO of Nominis, and we will also hear from Uwe Pum, who is the COO of CryptoSwift. So on the agenda today, we will first start with the Nominis presentation by Snir, which will be about 25 minutes, followed by a question and answer period. Then the CryptoSwift presentation, which will be about 25 minutes, and also a Q&A afterwards of about 5 minutes. And you can feel free to send me your questions directly via chat or just post them in the chat and I'll read through them. So we will go ahead and get started with Snir. So Snir, I'll give you the floor.
Thank you and hello everyone. Seems like I have some issue with the microphone, so I hope it will be okay. Give me 1 second and I'll share my screen. Okay, can you see my screen? Perfect. So
Yes.
thank you again for joining and hello everyone. My name is Neil, I'm the founder and CEO of Nominis. And today I'm going to talk with you a little bit about travel rule, and then I'll pass it, once we finish the session and the questions, I'll pass it to Uwe for another 25 minutes about the travel rule. So basically, what is the travel rule? The importance of quality of the intelligence and how poor intelligence can risk your compliance, and the importance of KYT attribution and clustering as a solution. That's what I'm going to speak today. So basically, what is the travel rule? Yeah, the travel rule is one of the FATF's recommendation that VASP should share originator and beneficiary information. For crypto transactions, it can be above 1,000, it can be above 1,000 euro or dollar. But the basic idea is that VASPs need to communicate with each other and share information. That's part of the travel rule. This is something that started from the traditional finance, and over the last years started to move into more the tradition, from the traditional into the crypto space. And we see a lot of cases like that, rules that started as traditional finance, the regulator is trying to implement them on the crypto sector. Travel rule has some challenges. Of course, some of them belongs to data. Travel rule is not just data exchange obligation, and this is important. It's basically an intelligence challenge. Before everything, before the technological issue, it's an intelligence challenge, which exists in an ecosystem where anonymity is basically everything. Bitcoin, crypto, in general, started as anonymous, and over the time became more institutional. Accurate wallet attribution and everything about clustering, super important for travel rule. This is part of the core things that eventually allow any travel rule company and any exchange, VASP, bank to operate. And of course, transaction monitoring and KYT ensure that such decisions based on reality and not just assumptions. Regarding the adoption of the travel rule, so in general, we estimate that around 20 to 30% of the VASPs and banks are more, but VASPs in general, only 20 to 30% are fully compliant. There is a lack of enforcement, and compliance could, the lack of enforcement and compliance could be due to lack of interoperability, no global standard, data privacy issues, and basically difficulties to obtain some data. And as we've mentioned before, travel rule eventually requires attribution. This is the first step for implementing travel rule. And the basic thing to do is to attribute correctly the originator and the beneficiary. And when we say attribution, it's not just about the entity, it's also about understanding if this is a private wallet, not a private wallet, unhosted wallet, and etc. And the identification of this, whether a transaction can be escalated or reported, this is basically the idea of the travel rule. And in order to do this, again, first step is attributing wallets. Why is it so difficult? Yeah, so blockchain ecosystem in general, this is pseudonymous by design. It means that even though the transactions are pretty much public, but the control and ownership of the wallets are not. Nobody without an intelligence be able to know who stands behind the wallet, which entity or which person. Therefore, attribution requires external intelligence. Everything on the ledger is good and important, but it's not enough for intelligence. And one entity may control more than one wallet. You see today, a lot of the attributed wallets are actually belong to exchanges, VASPs, banks, and today one of the huge clusters that we have over the blockchain are all belong to different exchanges. And again, this is a very dynamic space. We see that wallets are created, retired, and basically this is a dynamic place. Static attribution is not enough. We see in many cases where static attribution was implemented that it caused a lot of errors. Eventually, as I mentioned before, the crypto space is pretty much dynamic. And in this space, there are some merging, there are some movements of wallets. In many cases, that the wallet belongs to one entity, and then you understand that the wallet is part of a bigger cluster that belongs to some payment processors. So everything is very dynamic in this space. And again, travel rule is basically rely on this external intelligence and behavior patterns. One of the interesting case studies that we had recently is about a bank that performing travel rule. As part of the travel rule, the bank had to report about a transaction that it sent, a transaction that was over $250,000. The problem was that the wallet, they used different types of vendors, and the wallet attribution was incorrectly. Due to this wrong attribution, the wallet flagged as a legit exchange, even though it has an exposure to terror financing. For those of you that are familiar, of course, with the crypto space and see a lot of hot wallets, those wallets has a lot of exposure to different stuff, from illicit activities, either gambling, dark web, and etc. Basically, every main wallet of an exchange has an exposure to such activities. And even those, we treat, and basically everyone in the space treat eventually those wallets, if they belong to a well-known exchange, it takes into consideration when we build the risk score. In this case, the wallet was attributed inaccurately as a legit exchange, even though it was an unknown OTC desk that basically has a lot of exposure to terror financing. That led eventually to the transaction was approved. Later on, the bank, by the way, received a request to explain why it was approved, because this wallet didn't make sense. There was no sense that such a wallet would interact with a bank. You can see here the example. We've, of course, took out the name of the exchange, but you can see the example. You can see in the middle the OTC desk, which was flagged inaccurately as a legit exchange, and you can see connections to some terror financing. And on this side, you can see the connections between the exchange and these OTC desks that interacted a lot with terror financing. Again, the problem in this case wasn't the travel rule itself. Travel rule was completely okay. The problem was the attribution. The identity and the attribution about this wallet was incomplete and outdated, which eventually led to exposing this bank to huge fines by the regulator. So more general about KYT attribution and clustering. Comprehensive transaction monitoring can aid travel rule compliance. The idea is that when you do it correctly and you combine both on-chain, off-chain analysis rather than the static labels, the off-chain data became a very strong part of the intelligence that the client receive or the company that's using the platform. Seeing deep dark web intelligence, gale intelligence, those are all super important stuff when you do intelligence or do wallet screening and risk assessment for wallets. Behavioral patterns, of course, this is super important part of it. One of the things that we do is not just rely, of course, on the source of funds, but also trying to understand the context and the behavior of the wallet. And in addition to all of this, clustering of wallets, we see it a lot in UTXO-based blockchains, that clustering wallets, this is super important stuff in order to understand and to be able to connect and do risk assessment in scale. Why is clustering so important? Yeah, so individual wallets rarely tell even fraction of the story. We see that when you cluster a wallet or trying to understand connections between different types of wallets, you're able to get more information about who is the person or what who is behind this wallet, what this person tried to do, if this is an exchange or not. And clustering is a super important topic or core feature that should be when you do blockchain intelligence. So what are the benefits to compliance teams when we're talking about travel rule and KYT in general? So travel rule alerts can become starting point for investigation. You know, every time that there is a change, something that you might thought good, but eventually due to the data exchange, you were able to understand that the person who filled the KYC and operated on your platform is not the person you think. As one of the examples is that research suggests that over 80% of the fraud and scams started from wallets and accounts that basically had KYC. So KYC is not enough today to just block fraud. This collaboration of data exchange between VASPs, this is an important part of detecting fraud. Compliance teams, along with a travel rule, can validate whether a wallet actually belonged to an identified VASP or to a specific person. The guy that tells them that he owns the wallet, they can make sure now that he tells to the other exchange or VASP that he is really the owner. And in this case, it's also helped with reduce unnecessary escalation and eases explanation of decisions to the regulators, of course. Successful implementation of the travel rule. Eventually, when you combine blockchain analytics and travel rule, when you combine it together, you're able to see not just the blockchain data, but also to combine it with actual KYT, not that is just based on your clients, but also on wallets that outside of your platform. So basically, with a good implementation of the travel rule, you have the on-chain data, you have off-chain data, you have information about the client from your platform, and you'll have information about the receivers from this client by data exchange from other VASPs. This will give you the entire picture and more information that you need in order to stop fraud and to make sure that the person is really legit. Thank you.
Thank you so much, Snir. That was really, really insightful. So we'll start with the Nominis Q&A. So I have 3 questions for you, actually, that I would love to start with. So first, what would you say are the main gaps in current industry solutions for travel compliance that you've noticed?
So travel rule, it's not basically, there is no standard today. This is one of the problems. And there are many different types of platforms in the market eventually. And again, the gaps is like every other industry. When there is no regulation and no one standard, it became a little bit difficult to understand what teams, what clients should do. I think this is a big issue today with travel rule. And of course, CryptoSwift tried to solve this with our platform, and that's great. But in general, we saw that at the beginning of the blockchain intelligence era, when there was no standard and the regulator didn't even know what to ask people. I think we were on the same phase with travel rule, but it will be improved over time.
Interesting. All right. Thank you so much. Next question. What would you say are the core goals regulators are trying to achieve that you've seen, at least with the travel rule?
So basically, since it started as from the TradFi world, the regulator today is trying to mimic everything that it does on the traditional finance and just copy it to the crypto space. Sometimes it goes well, sometimes not. In this case, the idea of the travel rule is to make sure to reduce fraud, of course, and to fight money laundering in many cases in the illicit activities. So this is another layer, as part of what we see. This is another layer that the regulator trying to achieve in order to fight money laundering and fraud.
Okay, fascinating. And then one more question before we move on. So I know that Nominis is quite familiar with terror financing. Do you think this can be, applied at all with the travel rule?
That's a good question. It depends. We saw some cases, and that's super interesting. We saw some cases when we do some reverse engineering to cases that exchanges received funds from wallets or from beneficiaries that later on was designated by OFAC or by the NBCTF. In many cases, by data exchange with other VASPs that send information, they could have probably know that something doesn't look okay in this wallet, and to identify terror financing and other illicit activities before it had to being escalated by the law enforcement themselves. So definitely this is something that can assist with helping companies and to block terror financing and illicit activities.
Okay, very, very interesting. So thank you so much, Snir. We're now going to move on to Uwe. So Uwe, I would love to invite you. And this will be a little bit more of a sort of interview style segment where I'll be asking Uwe questions and we'll be having more of a discussion about the travel rule. So Uwe, go for it. So I would love to hear a little bit more about travel rule messaging in general. So first, can you tell us about centralized versus peer-to-peer travel rule network designs?
Yes. Hi, Julia. Hello, everyone. Thank you, Snir, for the insightful and the kind of integrated overview about the travel rule and blockchain analytics can accomplish together. And I will be here as a representative of an actual travel rule platform to dive deep and discuss these advanced use cases, and especially what banks as regulated institutions should bear in mind when adopting their stack around travel rule compliance. So yes, to get started, then Julia, as you rightfully asked, there are two broad designs to travel rule solutions. There are centralized and decentralized applications. So CryptoSwift is a centralized one, so you can think of it as a SaaS platform. And the general idea is, of course, quite simple, that there is a crypto business, whether it's a bank or an exchange or a wallet provider. So there are quite a few different kinds. But the general idea is that the outgoing messages or withdrawals and incoming messages for deposits, they would be handled through a solution such as CryptoSwift. And there is a cloud-based web application that handles the travel rule messages, which primarily contain the payer and payee names, whether they're natural entities or persons or legal entities. And of course, it will each message corresponds to one transaction. So the transaction hash, the currency involved, the amount involved. So that would also be included in said messages. And For withdrawals, it's quite easy, right? If a user is getting funds out of the platform that you're operating, then you can initiate a travel rule message. You can send it out. CryptoSwift will try and deliver it to the beneficiary virtual asset service provider. But here the market is really messy because certain VASPs already have travel rule protocols in place and they are interoperable with ours. Others do not have them in place. The third kind have them in place, but the travel rule platforms are not interoperable, at least not with our solution yet. So it's a quickly evolving market, and whether or not the VASP will ever adopt a travel rule solution very much depends on the jurisdictions they're operating in as well. But over time, we expect regulators to absolutely insist VASPs in their jurisdictions to adopt the tool, and over time, we also expect this interoperability challenge to be solved just by way of operators like us integrating with one another. So long story short, you can send the messages through the centralized cloud application. And then now if you get a deposit, the question is, do you get a travel rule message with the accompanying data? And again, it's a messy situation. You might get it, you might not get it. And this is where we also help identify who is the likely originator of VASP in this case. We do this with the use of blockchain analytics in terms of attributing the wallet to a likely VASP. And this can be corroborated with the user confirming that yes, it is indeed coming from such a wallet that is operated by such a VASP. So that's possible as well, but for the time being, it's not possible to get all the messages. But the centralized approach basically allows you to have the transaction hanging in the cloud until the day it's kind of grounded by the counterparty VASP. Now, the other design is the decentralized design, where you don't have this cloud solution, but every VASP or a node in that decentralized network needs to have their own backend capacities to store the travel rule information and attempt to ship it across to other nodes in the network. As long as these nodes are in the network, then you can ship it along, and if everything is up and running, you have the message grounded. But in case the VASP is not on that protocol, then you have an issue. Then the question is, does that decentralized solution have a cloud-based repository where messages are cached until they can be downloaded to the intended recipient? So it's kind of more beautiful in terms of the decentralized canon that the blockchain is known for, but technically it's a little bit more challenging because you have no guarantee that the message is properly attempted to be delivered. And from a compliance perspective, it's really important to note that different jurisdictions have different expectations as to the delivery of the message and like confirmed delivery. So typically it is sufficient to make an honest attempt at sending the message out. And this is where we step in. So the sending VASP doesn't have to go knocking on doors of these intended recipients. We do that on behalf of our clients. And that is enough. But increasingly, conservative regulators are expecting that the travel rule message is certainly delivered and the travel rule data is complete before the funds are made available to the beneficiary. And that is causing friction. And this is why regulators are taking it step by step. So demanding that all message or all data is complete at this stage of market development, that would simply freeze the market and wouldn't get us anywhere. So that's the centralized and decentralized architecture out of the way.
Interesting. Okay. And can you tell us a little bit more about pre and post transaction workflows?
Yes. So kind of in line with having complete travel rule data, there are two approaches that regulators are looking at. So the most popular way is kind of the more lenient version, which is the post-transaction workflow. And the regulation basically says that the travel rule message has to be sent out with the transaction, like concurrently, is the most logical way. Technically, you can do it after the transaction a little bit as well, but the point is that the funds move independently of the travel rule data, let alone independently of the travel rule data being verified by the beneficiary institution, right? So funds are shipped across, the data is shipped across independently, and then it is up to the beneficiary institution to figure out whether they want to match the travel rule, persons involved before they release the funds, or they just release the funds to the user. So for the time being, this is the accepted practice in most jurisdictions. However, jurisdictions like Dubai, Hong Kong, they are increasingly stringent. So they would want to see that, okay, the intended beneficiary is indeed the owner of this wallet. So there are no mismatches and no kind of, no room for abuse. So that's still the post-transaction workflow. Whether the data is verified or not is then kind of up to the jurisdiction and the risk appetite of the beneficiary institution. Now, the pre-transaction workflow, this is where the travel rule message has to be shipped across and verified before the funds are released, right? I mean, even the funds are sent to the beneficiary, let alone made available to the user. So the pre-transaction workflow is sort of what regulators are getting at, but you can imagine that as long as travel rule infrastructure is not perfectly adopted, then there will be massive problems for users, operational teams, compliance teams. So let's see if and when the industry gets there, but generally speaking, this is certainly what the regulators expect.
Interesting. Okay. And how do different regulators approach pre versus post transaction workflows in practice? What do they actually do?
So let's say that in practice there is lenience. So pre-transaction workflows are hardly ever expected anywhere. So this is not where the market has evolved at this time. Maybe in 5 to 10 years it will get there, but that's kind of let's cross that bridge when we get there type of situation. But other than that, it is exactly what I said. Certain regulators want to verify the information before the funds are released to the user, and this is maybe the biggest requirement or most notable requirement that VASPs have to be mindful of.
Okay, cool. And then one more question before we move on. What should compliance officers do when travel rule data is missing for deposits?
So this is, there's quite a bit of discretion for beneficiary institutions. So generally speaking, first of all, everybody can run a KYT check through blockchain analytics. And if the wallet shows up as low risk, then it is basically permitted to complete the transactions without the travel rule data being complete. And this is the practice in the vast majority of cases. Again, we see regulators like VARA expecting the data to be there and the funds not getting released before that. But yeah, there is discretion. Do what checks are in order. If the amounts are small, I don't think regulators will mind that much. But the moment there are signs of, let's say, structuring and slicing and transaction monitoring flags going up, then the compliance officer should be very mindful of letting these transactions through, even if it shows up green in blockchain analytics.
Okay, cool. So let's move on to self-hosted wallet verification. So how should compliance teams handle cases where the transfer is made out to a self-hosted wallet of another user?
Yes, so maybe before I get to this question, I'll also quickly demonstrate what the self-hosted wallet verification is like, because this is an like a core part of the regulation. The travel rule messages, as we just discussed them, this applies to centralized exchanges, situations where there is an actual kind of operator with their reasonable governance and compliance teams and functions in place. But if funds are designated to a self-hosted wallet, then none of that applies. There is nobody on the other side to pick up the phone and have that compliance discussion with you, right? So the regulations basically envision what you call a self-hosted wallet verification process, where the servicing institution has to basically make sure that the funds that are being sent are sent to the user's own wallet. Okay, this is a pretty strict restriction in terms of who you can actually send money to. So the user has to demonstrate that it's coming to my wallet, and sending it to somebody else is, not exactly restricted, but somehow not advised, because then you can never, from a traditional regulatory perspective, you can't exactly prove who is the owner of this wallet, and that makes regulators very uncomfortable. And this is one of the kind of big gaping holes in the crypto regulation landscape overall. But for the purposes of this quick demo, then imagine that there is a user logged on to kind of sample bank. We call it the CryptoX bank, and they want to send out funds to the user's own wallet. So I'm logged in as a certain Thomas Coleman here, and then I'm sending money to my
Interesting. So first of all, thank you for that wonderful demonstration. We'll move on to the last topic, which is multi-vendor strategy. So how should a bank view centralized versus peer-to-peer travel rule networks when designing their compliance stack? Wow. Okay. Thank you so much, Uwe, for such an insightful presentation and demonstration. Uh, Sorry.
Um,
Okay. Thank you, Uwe. That was also really insightful. So thank you for that. Um, Second. Here we go. So I would love to ask you a few questions for a quick Q&A. So first, how do you see travel rule requirements evolving as the crypto industry grows? Okay, interesting. And what metrics would you say compliance teams should track when measuring that they're adhering effectively to the travel rules? Okay, thank you. And last question, are there any upcoming regulatory changes that firms should be preparing for now, or any that you imagine in the future that we should be anticipating? Okay. Thank you very, very much, Uwe. I want to thank everybody for coming to the crypto compliance webinar that Nominis and CryptoSwift hosted today about blockchain analytics and travel route platforms supporting AML compliance. So thank you so much for attending. We hope you found it insightful. And for more information on Nominis and CryptoSwift, please feel free to check out our social media and our websites. And please be in touch and look out for future events. Thank you so much to everyone for coming, and we hope you found it insightful. Thank you and have a good day.